Yes, I'm wearing a pumpkin. I don't know if you can see it all. There it is. Wearing my pumpkin shirt. Shout out my mom who sent me this because she knew I wouldn't buy an outfit. Let me just get there. We go. All right. So it is Monday, October 31st. Happy Halloween. I hope you have this opportunity to go out and make some memories, give some candy away, just have a good old jolly time. And then the most important question. Will you be putting up your Christmas decorations tomorrow? Or is it the weekend? Just curious. I like to see all those Christmas lights out there. So let's get into the news. October 31st, Monday. Did you know, and I found this very interesting, that as of this morning, so without the numbers, which I think are down, the Dow is on track to have its best month since 1976. As of this morning, the Dow Industrial, those 30 stocks, are up 14.4%. I had no idea. I'm not a stock market person, but I thought it was very interesting to read that the stock market, at least the Dow, is on pace to have its best month since 1976. That is a long, long time ago. Is this a bear market rally? Is this the start of something new? Is this a pivot from tech to the real economy? Who knows? I don't, but yes, 14.4% for the Dow. Very, very interesting. Next up, let's talk about Goldman Sachs. And I think we're going to get a lot of important information on Wednesday. First, Wednesday, if you don't recall, that is the day the Fed will release its interest rate hike. I think it goes without saying that they're going to do 75. That will bring us to a rate of 3.75 to 4%. Then there are some real questions. The general belief as of today is they will get to a terminal rate of between 4.5% and I think 5%. So first, why am I excited about this? Is we're almost done, right? We're almost there. We will have come up roughly 350 basis points and have 100 basis points, give or take, left. To me, that is good news. Very, very good news. Because again, I'm the guy that says rip the Band-Aid off. Let's get there. Let's have the pain so we can build from there. So again, after Wednesday, we will be almost to the top of the mountain. However, then some real questions happen. In Powell's press conference, this press conference will be watched and rewatched with bated breath. Because I believe the Fed wants to slow down. I believe the Fed wants the December rate hike to only be 50. I think the Fed is scared that if they say that clearly, the stock market rallies. Remember, one of the things the Fed is trying to do is kill demand. What happens if the stock market takes off? Well, it's kind of reverse negative net worth. You also probably get the Treasury coming in, which means mortgage rates come in. You see, the Fed is in a very, very difficult spot. Do they come out and sound tough and then become data dependent? I don't know. This is the real question. This line here. After Wednesday, do we have 2 rate hikes left? 75, 25, 50, 50, right? Whatever that is. Are we done in February, like I hope? Or do they just start cutting us with 25 basis points until the summer? Do we rip the Band-Aid off with 2 and just get to the rate and see where the pieces land? Or do we slow down and just ratchet up the pain every 6 weeks? That is what the market will be looking at Wednesday. That's what I'm looking at. I do think after this, I believe, fourth 75 basis point move by the Fed, it probably will be the last, which is okay. I wouldn't mind 50-50 to get us to the end of this. But I now fear we might go 75 and then go 25, 25, 25, 25. The key with this slow approach is we probably go higher. I'll say that again. If we go fast, we won't have to go as far. If we go slow, we will have to go farther. That's a tough decision. You know where I come down. But again, we are the reserve currency of the world. There's true pain happening around the world. It's a delicate balance. I'm glad I don't have to make those decisions. But I do think, ultimately, do they slow down and go farther? What do I mean by that? If they go fast, I think we top out at 5% terminal rate. If they go slow, we may have to go to 5.5. That's the trade-off. Do we go slow and far? Do we go fast and shallow? I think that's where we're at. Wednesday will give us some color. Inflation. We have to watch inflation, specifically CPI headline inflation. The Eurozone just posted their highest headline inflation reading ever. I'll say that again. The Eurozone just published or printed their highest headline inflation rate ever at 10.7%. And warned, get this, and warned it could get worse. There is a chance that into the winter, we go back and revisit 9.1, was that the high? 9, yeah, whatever it was. There's a chance that we may go back that direction. So again, inflation is not beat. The Fed's got a tough position. Next, housing crash. So 100 or more people have sent me George Gammon's video about the housing market falling 50%. I will highlight that George Gammon is not one of these crash bros, if you will, because George Gammon's talk did two things. One, he talked about real prices. So he wants to adjust for inflation. That is important. And we're going to do some numbers on this video. So get a piece of paper, get a pen. If you are watching this and don't have a piece of paper, pause the video and go get a paper. If you're watching this live, rewatch it, because again, George Gammon's thoughts on the housing market when adjusted for inflation are important. Because when you say real versus nominal, it just changes the game. So again, what George Gammon is saying is that housing adjusted for inflation may go back to 2012 levels. I want to break that down for you because it sounds scary, but it's really not that big a guess. All right, you ready? So the first thing we have to do is understand what median home price was in 2012. Remember, 2012, roughly speaking, was near the bottom of the Great Recession. So we need to go back to 2012 median home price. And what I found with a very quick Google search was the median home price was $180,000. That is important. Write that down. Next, we need to realize where is the median home price today. Again, write this down. As of the last reading, which we talked about, the median home price in the United States is $389,000. I'm rounding to the hundreds. I think it was 389.9, but round to whatever number you would like. So the first thing you have to do, you must appreciate that between 2012 and 2022, we have had inflation. Did you know that $1,000 or $100 or whatever increment you want in 2012 is now worth $129.28? So there's been 29.28% inflation in a decade. That is important because nothing happens. Our $389,000 house adjusted today to 2012 levels is worth $276,101. I'll say that again. Nothing happens. Inflation is zero for the rest of eternity. We have already had 29.28% inflation between 2012 and 2022. So again, George Gammon is telling you that if you adjust the median home price today at $389,000, it is already like $276,000 in 2012. So we have already whacked off 30%. This is important. When people put numbers out there and you don't understand the math, it's really not that bad. So, okay, step one, nothing happened. We are down 30% in real terms. All right, great. George Gammon, in his video, assumed that 2022, again, for simple math, was 10% inflation. Great. So I actually didn't do this, so let's write this down. 389 minus, let's call it 113. That's that inflation, that's 276. All right, just for easy math, we're going to take 10% inflation off this 389 because, again, you and I both know inflation is crazy. I think George Gammon says it's 10% this year, so let's take that off the top. So that's another $39,000. What is that? 11763. Okay, we are at $237,000 and we haven't had any price drops. No price drops. Remember, and our goal is to get back to $180,000. So again, as you can see, the other thing that's very important in George Gammon's call is he didn't time bound it. He just said over time. So again, it would not take another drop of maybe 10 or 12% in inflation, and in real terms, we get back to 180 grand. So, for all of you that have asked, is George Gammon right? Mathematically speaking, it is very likely that housing, given the adjustment for inflation, gets back to 2012 levels. However, he is missing something. Let me get something for you real quick. One sec. So, you remember, I have this shirt that says, I use inflation to get rich. Ask me how. Remember this shirt? Let's talk about that. Let me put this back. So, I want to ask you a question. When you buy a house, are you buying it cash? 95% of you are buying it with debt. Most of you are buying it with fixed rate debt. So I ask you, if you knew inflation, as George Gammon talked about, was going to go up 10% a year for the next 5 years, what would you do? Well, if I could find a cash flow rental with fixed rate debt, I would buy as much as I could because I will be paying that asset off with inflated dollars. I believe the error it wasn't an error. That's not fair. It was just missed. It wasn't discussed. If you want to get rich with real estate, your job is to find cash flow rentals today at today's rate with 30-year fixed rate money, and then let inflation make you rich. It is that simple. So again, is George Gammon right? Probably. However, you can use inflation to get rich. The debt inflates away, rents go up, cash flow goes up, equity pay down. So again, it sounds scary to say that housing could crash to 2012 levels, to which I say, let it. I have so much debt, let the debt inflate away. I would love inflation, given the portfolio, to go down or go up 50%. That, you can't have it both ways. So again, is George Gammon right? He didn't give a year. He said in the future. He said adjust it for real, not nominal. Again, no price drops. 389 minus 113 grand, which is inflation that has already occurred. Added another 10% for this year. We're at 237. It doesn't take much to get us to 180. So George, I'm probably right. Who knows? But again, it's not that scary. Again, if you own real estate and it has debt, you want inflation. Inflation will make you rich. Hopefully that makes sense. So we talked about housing debt. So I have a question. I have a question for my audience if you are still here. And please put the comments once this video posts so I see it. If you respond during these live streams, I might miss it. As you know now, I will not be recording the daily financial news Fridays and Saturdays. I did, if you are subscribed to my channel, that's the beauty, if you subscribe to my channel, I sent you a post with my raw notes that talked about Friday, that talked about Saturday. Those came out in the morning. Again, I still read the financial news, so I sent you my notes. A, was that helpful? Because I don't have to do it. Was it helpful? Let me know. And then 2, I have a question for you. Something I could do is Sunday morning, I could come in, do a live show about Friday, post that. I could come in, do a live show about Saturday, post that, and then do my Sunday live stream. So I could do 3 shows Sunday morning. I would suspect the Friday and Saturday shows would be a little bit shorter. Would that be helpful? Do you just want my raw notes? And if you're a subscriber, you saw those? If you're not subscribed, subscribe, and you can go back and look at my community posts. Or would you like 3 videos Sunday morning? Doesn't matter to me. I want to do what you desire. So let me know in the comments below. Remember, I can't see any of these comments because my eyes are not that good. So at the end of the day, take care of yourself. Have a wonderful day. Happy Halloween. Yay. Bye-bye.